Hello and welcome to Commodity Champions. I'm Manisha Gupta. When it comes to the yellow metal, most of our conversations have been around the change in prices, but not today. Today we talk about an emerging trend, that is exchanging of old gold jewellery to take advantage of the high domestic gold prices. Indian jewelers are reporting around 25% of their sales as exchange jewellery. The World Gold Council says that Indians will likely sell a record used jewellery this year. The overall demand for gold in India also has seen a decline to around 78 tons in the first quarter of 2023 as compared to the previous year. Consumers are also preferring gold bonds over physical gold buying. This could give a boost to the sovereign gold bond scheme. The RBI's first tranche for the scheme for FY24 is underway. This week, while the second one will come in the market in the month of September. To discuss these demand trends, we have with us Ashish Pethe, he's ex-chairman of All India Gem and Jewellery Domestic Council. Saurabh Gadgil is managing director of P. and Gadgil Jewels, and PR Somasundaram is regional CEO India at World Gold Council. Gentlemen, hi, thank you so much for joining us. And so I would want to start with the sovereign gold bond scheme, where a tranche has come after a very long time. I mean, it really has been about erratic tranches being released into the market. Having said that, we have seen good response into this one. What is your sense with the gold buying patterns that we have seen in India and bond buying that you see right now?
Well, Manisha, thank you very much. As far as the sovereign gold bond is concerned, my view, having seen the past issues and how successful they have been, is that it's definitely one of the best investments to make when it comes to the gold market. It gives you a return of 2.5% and an upside on gold, which is tax exempt. But I am unable to convince myself that it is actually leading to any drop in physical buying. It probably attracts people who would otherwise not be interested in gold or who are on the fence. I don't think it is converting physical buyers into investment holders.
So how would you look at the first quarter of this year? We've seen 17% of a decline in demand coming. How is the second quarter panning out until now? How is this year looking to you with so many uncertainties that we're looking at?
Yeah, the price certainly has hit the consumer hard. I don't think savings have increased that much. So what we see is that the softness continues into the second quarter as well. We have discussed internally, maybe we should see if a good monsoon follows, we will see an uptick in the fourth quarter, but that all depends on how the prices behave. If the prices soften considerably, you could see a very significant increase as we have seen in 2021. But otherwise, you may have to see a softer demand this year because of the price. It has run up very fast.
Yes, very fast. And people who've been holding gold clearly seem to be rejoicing that. But I just want to take a step back, Som, and talk about the sovereign gold bond scheme yet again. And while we are looking at stronger buying into this one, and as you said, that it isn't really eating into the physical buying. I mean, that category is absolutely separate from that sense. But I also want to approach it from the global central bank buying, which last year was a record. First quarter has been great. India has been buying as well. And the way India really seems to be buying into this, and the fact that we've been discussing this, that India is also buying because of the SGBs and the kind of buying that has come in. How would you look at Indian buying, the gold bond in that relation?
Well, it's very difficult to link the two, Manisha, although on the face of it, it looks like the government is issuing the bond, the government is buying gold. That's not how it works, right? I mean, these are two different entities. And now this is RBI managing its reserves, diversifying into gold and increasing the gold as its reserves increase. And this is issued by the central government, and it is a central government debt. So while RBI might be managing it, it's not part of the reserve. So yes, on the face of it, it looks like as a country, we have issued bonds and we have bought gold. But that's not how it is. They are not linked.
All right. Well, the linkages are easy to draw, but as you said, okay, it's not apples to apples into this one. Okay, let's talk to our jeweler friends as well. Ashish, I'll come to you first. And clearly, the buying hasn't been so great in the first quarter. Second quarter, as Som says, isn't so great as well. As the jewelers, how are you looking at this market? Do you see pickup coming in? Is second half going to be the deciding factor here?
Good afternoon. As you understand, the consumer psyche is, based peculiarly on the movement of price and at what speed it moves. So whenever we have seen a substantial rise in a short span of period, We have seen the retail customers either first trying to sell whatever they have or taking a pause and waiting for the prices to settle down. As I've earlier also said that anytime there is a gap up price rise, like from 30,000 to 40,000 or 40 to 50 and now 50 to 60, people take a few months to understand what's happening in the price, absorb the price, and then the market stabilizes and then the physical buying comes in. So currently at 60,000, the customers or the consumers are absorbing the price. And once that is done, coming season, I think the buying would come back in. And if you take the year around buying, I think we'll be back to 2021 or 2022 levels. That is my sense.
All right. So, Ashish, in that sense, how would you look at it quarter-on-quarter basis? If the last quarter was weak, how are you looking at this quarter? And how is the next quarter then looking at in sense of numbers?
In a sense, I think what Som said, looking at the monsoons is also critical for us because if the monsoon is good, I think the next 2 quarters will be very good with the festivals also coming in. And towards the end of the year, the wedding season coming in. So next 2 seasons, I think, will be substantially better than the first 2 quarters, is my sense.
All right. Saurabh, getting you in the conversation as well. And, you know, I was reading a CRISIL report which says that this year is going to be positive in a sense that value versus volume is going to be one game. And the second is that where the gold prices have risen and with the kind of festivities and wedding season that is upcoming, it is going to be 12 to 16% of profit revenue that they see for jewelry as a sector. What is your sense on those numbers?
Good afternoon. Absolutely right, Manisha. Like we have said, gold is seen an upward trend and gold looks to be in the bullish area as far as pricing is concerned. Having said that, I think the first quarter, we're talking of a slow quarter in terms of quantity. But if you look at value, every jeweler, I think, has achieved their targets or has overdone their targets. So like CRISIL report says, this year is going to be a year when we'll see in value turnovers crossing last year's for sure. The value of the closing stock going higher, which will result in higher profitability for the jewelry companies. And I think, like we all have said, the next two quarters is seen a lot of festive buying, which we've seen in India. In fact, from July itself in Maharashtra, it's the start of the Shravan month, considered to be a very auspicious month. And then, it's starting with Ganpati and the Diwali, Dussehra. So I think overall the season looks good. And what CRISIL has said, I think definitely that seems to be on the card, because in spite of these prices, demand has held steady. And like So mentioned, that the physical demand for gold bullion coins has remained strong across India, and people are preferring to invest, and the price outlook remaining bullish. People are looking at having the investment in physical gold. That has been a saving grace during the last 3 months. Weddings are looking in the next couple of months. Weddings are there, and the festive season. So I think jewelry demand will also pick up. So all in all, I think we are heading for a good year. And I think the CRISIL report clearly states that sentiment which the Indian jewelry industry is also looking at.
Oh, well, absolutely. There have been various other reports as well, Saurabh, which also mention that the capital infusion and the store expansion is yet another thing that the jewelry as a sector will keep seeing growth within. How do you read that one?
I agree that, there will be a lot of expansion happening pan-India. Along with that, I also see a lot of consolidation happening. So you will see some players, merging down their businesses. You'll see some joint ventures happening. You will see some stores being relocated. So it's not just going to be pure new expansion, but it will be a lot of consolidation, a lot of reorganizing. But I think time has come that the bigger chains are now looking at smaller towns. Tier 3, Tier 4 also is what they're targeting. And across India, there is one message coming out is that people want variety, people want good design, and people want a brand. By brand, I mean people want assurance of quality, assurance of good service, assurance of after sales and buyback. So all this is ensuring that the bigger jewelers are going into smaller towns, and the smaller jewelers who are unorganized till now are getting organized and pulling up their socks and becoming like the bigger ones. So we see this confluence of smaller, bigger jewelers coming together, reorganizing, but we are heading in the right direction. And I think it's a year of expansion, year of consolidation, a year of getting more and more organized, and a year when consumers will get the best in terms of prices and in terms of making charges.
All right, I'll come back to that later. But this one is for you, Ashish. And, as Saurabh pointed, variety versus loyalty, how do you see the jewellery sector making use of both of these concepts? And the other is, I remember having a conversation with you long back about how regional players also seem to be expanding now in different states in need or in search of more consumers.
Manisha ji, what we have to understand is that jewelry business is not in a vacuum. So the economic changes that are happening in the country, may it be digitization, the demographics of the country are changing. So that will reflect in jewelry business also. I'll give you an example. But 10 years back, we had done a consumer survey where initially the prime focus of consumers was trust. But with hallmarking coming in, digital payments coming in, the trust has moved to number 2 and designs has moved to number 1.
Okay.
So the primary focus from the consumer's point of view, as Saurabh said, is variety, designs, and brands are offering that kind of variety. So brands and the design is number 1 mantra. At the ground level, with a lot of national players and regional players expanding, capital being easily available. So they are getting deeper into the markets, and the local brands which have been there for maybe say 50 years, 100 years, they are getting bigger and they are converting themselves into regional jewelers. But what is happening because of this, smaller jewelers, smaller single store jewelers are finding it difficult to compete with them. So either they have to evolve themselves or probably move out of the market. So that rearrangement in the market is happening because the price differential between a large chain and a small jeweler is going down because the larger ones are getting that economies of scale. Their pricing is getting closer to a smaller jeweler. And the customer, when he goes to a large jeweler, he gets a large variety with hallmark, buyback guarantee, and the works. So at the ground level, there is a lot of rearrangement happening.
All right. So it definitely is variety versus loyalty there. But absolutely, I get your point that there is a lot of rearrangement, realigning, consolidation, and even growing happening when you look at the jewelry sector. But with that, we'll go for a very short break. When we come back, we'll talk about the organized player versus the unorganized, and also talk about the kind of exchange volumes that we are seeing into the Indian markets.